Hello, good morning and welcome to this edition of Buy Now, Sell Now right here on ET Now. I'm Cheryl D'Souza along with Mubina Kapasi, and I'll take you through the top headlines that we're tracking this morning on ET Now. And global markets hold their ground, and the ditto is coming in for the Indian markets as well. The US Democrats are preparing $2.4 trillion relief package. The voting is likely to be next week. On back of that particular news, you saw a late surge coming in the US markets. If you see this morning, our Indian markets, strong global cues have helped lift the sentiment on the street. No doubt the markets are off their day's high level, but definitely holding on to gain. Nothing to complain about today. Moving on, you have Granules. There is a buzz in today's trading session. Reports are suggesting that PE firms are looking to acquire majority stake in the company. On back of that particular news, you have Granules that actually saw an uptick of about 10% intraday. Moving on, telecom companies continue to be in focus. JIO ends Vodafone-Idea's dominance. They've become the lead player in India. Bharti Airtel, on the other hand, is down over 11% in the last two trading sessions. Pressure continues on that particular counter. Eye on the IT space. Accenture has reported a muted Q4 revenue growth. No major surprises, but the commentary is in line with the recent commentary coming in from the Indian players. So on that particular note, you can see the tech players are actually buzzing in trade today. Nothing negative coming in from the Accenture's earnings report. And Ridham Desai has written a note in saying that India's manufacturing is at an inflection point, saying that India's manufacturing pie will increase 3 times in the next 10 years. So some positive notes, some positive cues coming in from the Ridham Desai's note. But let's take a look and let's see what the markets are doing this morning. Like I mentioned, holding on to gains today. The Nifty is above the 10,800 mark. Actually, through the course of the day was above 10,900 as well. Right now testing that particular level. Broader markets are in sync with the benchmark indices. It's the small cap index that is actually leading the gains among the broader markets, up over 1% in trade. All sectoral counters apart from your PSU banking index, that's actually nudged a bit lower right now. But all the sectoral indices are gaining in trade, with IT index topping those charts. You have FMCG sector also that is gaining in trade today. Apart from that, you have Marico that is buzzing based on news. You have GMR Infra also that is gaining on Kakinada SEZ stake divestment plan. Also, you have BPCL that is actually in news today as well. So these are the counters that are moving in trade this morning for you. And on that note, let's move on now for a bit, and let's talk about what else is happening in the markets as of now. That's Maruti for you. It's up about 1.6%. Remember, yesterday Harley-Davidson has announced that they are going to discontinue their India operations. Remember, we had told you that the talks had failed with other Indian partners as well for Harley-Davidson. If you see Royal Enfield, that is Eicher Motors, is gaining in trade this morning as well. Apart from that, let me talk about what are the other sectors. Like I mentioned, IT is one of them that is in focus today. You have FMCG sector that's also leading gains today, 1.8% in trade. That's higher by 1.8% in trade today. Marico is gaining as well. Healthy gains are seen on Marico, about 4% of gains coming in on that particular counter. You have auto sector, you have realty sector that's gaining as well. You have metal sectors that is holding on after a sharp decline that these counters have seen over the course of the day. I believe metal index is gaining for the first time in 7 days. You have auto sector that's gaining for the first time this week as well. But that is all on from the market front. That is what we are tracking on this morning when it comes to the markets. Holding on to gains is what we can say as of now. But if you look at the IPO street, that is a buzz. You had 2 recent listings, stellar listing coming for Happiest Minds as well as Root Mobile. Both of these stocks doubled on the listing day as well. And you have a series of IPOs that are lined up. You have Chemcon Specialty, you have CAMS IPO, you have Angel Broking IPO as well. And apart from that, you have UTI AMC IPO also, that is all set to hit the last street. Next, the IPO will be launching on September 29th. And to talk more On the IPO, we are joined by the UTI AMC management. We have the whole-time director and CEO, Mr. Rahman, joining us this morning. Good morning, Mr. Rahman. First, let's talk about the markets. They've actually witnessed increased participation of retail investors. Volatility and liquidity to an extent is aiding actually the momentum. What are the consumer trends that actually you are observing?
See, we have always been a retail-based organization. UTI is extremely strong as a retail franchise. We are very strong in the beyond 30 cities. So the trend will continue. If you see their participations in our business, in the mutual fund business, our equity AUM has grown and it has seen the very active retail participations. I believe that going forward, the retail participation will continue in mutual fund space, and that will help us the equity market as well.
Mr. Rahman, this is Mubina as well joining into the conversation. How are you analyzing flows in the mutual fund industry? Because the last couple of months we've seen this shift from mutual funds to direct investing. So what would sort of be the growth drivers going forward?
First of all, this temporary outflow because of the pandemic, I have no concern. If you see the outflow in the during the month of July and August is only 4,000 crore. That is around 0.5% of the total AUM. But if you see the new folios, the industry has added over 33,000 new folios. Our industry is indeed very attractive industry. Last 5 years, our industry grew, the mutual fund industry at the rate of 18%. I believe the industry will continue to grow. UTI AMC is well positioned to capture the market. As what we need to have, we need a very, very respected and well-known brand. UTI brand is a household name in our country. We have products and the performance of all our equity schemes, particularly the flagship schemes, both of the equity and fixed income are very good. We have a team to execute our goal. Our distribution network is well positioned. We have a very deep engagement program with our distributors, IFAs. As you know, UTI AMC is the founder of the IFAs in our country. We have a very deep engagement program with our IFAs. We have arrangements with banks, whether it is private sector bank, foreign banks, and PSU to distribute our products. We have our own direct channel to meet the requirement of institutional client. So performance, product in place, brand and distribution, and the team to execute will help us to capture the market going forward.
All right. Mr. Rahman, has digitization helped the industry, and how are you preparing for the post-COVID scenario in terms of a distribution market? If you could talk to us as well about, the tie-ups with banks, the outlook here.
So there are 4 important channels to distribute, particularly the equity and the hybrid product. IFAs, we have arrangement with over 53,000 IFAs to distribute our product. The banks are the distributors. We have our product approved in the platform of all banks to distribute our product. Then, in order to meet or serve the institutional client, we have a very good team to support our institutional clients. So far as digital is concerned, UTI is the early investor in the digital space. In 2018, we had the services of Accenture to guide us and help us in our information technologies transformations. and that has started yielding results. We have very strong, robust platform to execute our digital strategy. We are in the position to, or we have hired certain individuals to lead our digital strategy. So our strategy is to have an interface. The user's interface and user experience has to be the world class. And as you know, the new young generations will go more digitally to invest, and we are ready to capture that particular market. COVID has taught us a lesson. During this COVID time, UTI AMC is one of the few AMCs which were in a position to honor each and every redemption request on time. We were in a position to execute all transactions. We have seen the transactions and the new flows. I will not be in a position to give much forward-looking statement, but this new normal may survive for long, and UTI AMC is well placed digitally to capture its space in the mutual fund industry.
Mr. Rahman, let's talk about the IPO, and you're raising about 3,000 crore rupees through the IPO, which is entirely OFS. So post the OFS, what would be the shareholding of the sponsors of the existing investors? Also, do they plan to go ahead and trim their holding further? And also do fill us in if the company has any plans of raising fresh capital in the near future.
Have any plan to raise any capital at this particular point of time? We have very strong group net worth to support our business strategies. The shareholder, after this IPO, the SBI, BOB and LIC will come down to minus 10%. T. Rowe Price will have 23%, and Punjab National Bank will have around 15%, 15.25%. That will be the shareholding pattern, 30.75% with the public and around 1% with the employees.
Mr. Rahman, the equity constitutes approximately 32% of the AUM mix, and given the increased investor participation that we are seeing in the equity markets, how do you see your AUM mix actually shaping up, and will the share of equity rise from the current level that is there right now?
Our strategy is to mobilize more high-yielding asset, and that will come from the equity and the hybrid space. And we will try to work very hard to improve these compositions. But we will also give, and we are giving, and will continue to have emphasis on high-yielding fixed income products. So our product mix will be going forward better than the number which you are seeing now.
All right, Mr. Rahman, how do you view the competitive landscape? How do you intend to grow your market share in the mutual fund industry, the AUM going forward? And what's the plan to expand outreach in the tier 2, tier 3 cities?
UTI AMC has a very strong reach in beyond 30 cities. We are expanding our network, distribution network in beyond 30 cities. And as you know, this mutual fund industry, we are seeing the growth in beyond 30 cities. UTI AMC is well placed to capture the market. We will continue to have focus on top 30 cities. We have a brand, household name, we have a product in place, we have a performance and pricing power with us, and we have a team to execute. Our main areas of focus will be important IFAs in top 30 cities, banks, and the national distributors. We will use these platforms to execute our strategies to have a meaningful share of value.
Okay, just for the benefit of our viewers, could you also talk to us about that 1,250 crore rupee contingent liability that has been included as a disputed future liability? I mean, should investors be concerned about that? And what could be the challenges or risks to growth in the near future?
The matter is sub judice. It is a various level of courts. We have very clearly outlined in our risk factors and the litigation matters in a litigation portion in our RHP, and the answer has completely been outlined there. I do not anticipate any risk there, but matter is sub judice. Regarding the industry, as I mentioned to you, this industry is poised to grow. There is a pandemic period, and the beyond pandemic period, the industry is likely to grow as per the CRISIL estimates. And UTI AMC is well positioned to capture the opportunity in the growth. And I must share with you, during the last 2 months, as the industry data shows, that there has been a net accretions of the folios in the industry.
All right, Mr. Rahman, we'll leave it at there. Thank you for joining us this morning, taking us through the UTI AMC IPO and also talking about the markets. That was the whole-time director and CEO of UTI AMC. All right, now let's bring on board our guests for today. We have Kunal Bothra as well as Vivek Bajaj joining us this morning. Good morning, gentlemen. Thank you for standing by. Kunal, I'll come first to you. What are the high risk and low risk ideas that you have for our viewers this morning?
Cheryl, again, I think in a market like this, there is nothing which is called as low risk because of the high volatility in the markets. I think it's difficult to anticipate the stable kind of trajectory. But then, nevertheless, I think there are many stocks which looks attractive on the short-term chart. So the first one, which I'm suggesting as a buy, is a buy on Tata Motors. Tata Motors apparently is the first stock which I would suggest that as a buy. I believe that the stock is heading towards a strong breakout on the upside. There have been strong support levels which have touched for Tata Motors. Now, just because of the slight high beta nature of the stock, I would put this into a high risk category. I think positional traders could look at a buy on Tata Motors for a target of 140. Stop loss could be kept at 119. The second would be a buy on United Spirits. Again, a very, very interesting chart, Cheryl. And I think at 500-ish levels, I think United Spirits, looks as an extremely attractive buy on medium-term basis as well. The stock coming back to some extremely strong support territories, major support in terms of prices, oversold natures of indicators, and which is why I believe I think United Spirits could be a very attractive buy from a near-term view. I would put this under a low risk category because of the slight better beta nature of the stock, and which is why I would expect that the stock would probably gradually move up towards a 540 to 550 levels. Keep a stop loss of 489 on United Spirits.
Okay, let's also bring on board Vivek Bajaj. He's the co-founder of Stock Edge. Vivek, thanks so much for joining us today on Buy Now, Sell Now. Let's just get in your take on, what are you looking at the markets like? What's the sense you're getting? Do you think we may have perhaps hit that peak? Or the market may have run up too fast, so now we are seeing some consolidation, and also, of course, share with us, stock ideas, high risk as well as low risk for all the kinds of viewers we have.
Right, so thank you for having me here. See, if you see the market, the way it has run up, in fact, the global markets have run up largely led by weakness in dollar. And the moment dollar started showing some bound of recovery, all the markets, including gold and silver, corrected. So there is a very strong linkage between the way equity markets in India is behaving and the way equity markets globally is behaving. So we have to check out what dollar does. And US election obviously is one of the major catalysts of follow-on movement of dollar from here. Now, as far as Indian market is concerned, yes, there is a phase of consolidation going on. The price range between 10,600 Nifty to 11,600. This is a 1,000-point range the market is looking at right now. I think if we have to go very aggressive long in the market, it has to be when the price move above 11,000, 11,020 levels. Now, answering the question of stocks or the sectors, See, I'm a very thematic sector guy. I always try to figure out the right sector first and try to get into this stock then. So one of these sector which I'm looking at is the EdTech, which is very, very famous, especially on the unlisted space. EdTech is doing very good. But there is one company which is listed space, which has been in EdTech for a long period of time, is NIIT Limited. One can look at that stock. The company has huge cash reserve, and the company is now shifting its module from government projects to non-government oriented businesses. So I see a lot of organic and inorganic growth will come in NIIT Limited. So one can look at it for a long-term perspective. The second kind of low-risk sector right now is two-wheelers. I think with the current pandemic and people looking at having their own personalized vehicles, not trusting the public vehicle because of this COVID thing, I think there will be a significant sale in two-wheeler category. So one can look at Bajaj Auto if one likes to have export orientation in the two-wheeler stock, or if one likes to play the rural play of India, then one can look at Hero Honda. Both are good. Depending upon your individual preferences, you can select the stocks, but I'm very, very bullish on the two-wheeler space. As far as the risky sector is concerned, the stocks which could be very risky, but it could potentially lead to long-term wealth creation is the residential real estate. I think the way we all are looking to add more residential property or increase the space of our residential properties, I think residential real estate is already witnessing a moonshot and it is witnessing a demand growth. So companies like Godrej Properties, Oberoi Realty, now these are the stocks which have decent corporate governance, and one can look at a long-term growth opportunity in those stocks. And the second sector in terms of high risk is the current theme, which is more oriented towards user acquisition, user story, something what InfoEdge is known for with the access of the critical user mass of our country. I think there's one stock which is changing its goalpost from being a finance company to a data company, which is Indiabulls Venture. So one can look at this stock. There is a shift in the way companies approaching the new opportunities now. These are very risky bets, but could potentially become a multi-bagger. But it depends upon individual user or individual investor, what kind of risk appetite the investor carries.
Right, point taken, Mr. Vivek Bajaj. Thank you for giving us all those top recommendations that our viewers can look at. But hang in there, Kunal, as well as Vivek. We'll take a short break on this edition of Buy Now, Sell Now on queries. We'll come back with the queries after a break.
COVID-19 is driving the growth of information technology. Benefit from its rise by investing in IT ETF. Nippon India ETF brings you Advantage IT.
All right, let's get on board with our queries for today then. And we've got our first query coming in from Nandan Rao. It's a Twitter query that we've got. And he's saying that he's bought 200 shares of NCC at 68 rupees per share. He wants to know whether he should average it at a current market price for the long term. Kunal, I'll come to you first on NCC. Our viewer has got the stock at about 68 rupees per share. Look at the stock where it is actually currently trading around 31 rupees per share. So he wants to know whether he should average it at current market price for a longer term. Does it make sense to continue to hold on to NCC?
Well, I think the prospects for NCC on the charts, at least they don't look very attractive, frankly, Cheryl. But then it's not that bad a chart. I think even if you can give it a chance that there are some resistances which are in place for NCC at 38 and 39 levels. To be more precise, I think it's at 38.50 some levels for NCC on the spot basis. So if the stock manages to cross above it, then there could be a chance of a very strong and a steady recovery. This is also a stock which is typically not a low beta stock. So look at the last 6 months of price recovery we've seen for NCC from 15 rupees or 16 rupees approximately. The stock had jumped up to almost 31 rupees. Now, at a time when many of the small caps and mid cap stocks, they have gone 2x, 3x, 4x, 5x kind of returns. This is very small return or a small pullback on a stock like NCC. However, I still believe that there could be a case where the stock, where the indicators might turn around for NCC, but that would be some time off from current levels. If you can wait, on NCC and let the stock cross over this 38.5 region, I think that's where I believe momentum would come back again, and it's better to try and buy the stock on the thick of momentum, because the chance of you to try and get back to your cost price, your average net cost price, then would be far more higher. In case if you're looking to shift to some other stock, and I'm giving you a completely different sector over here, then why not look at United Spirits at current levels of 500 is something. I think the stock looks fairly attractive, and there could be a higher possibility that you can get at least a 15 to 20% return in a short span of time. So the choice is up to the viewer. If you're looking to stay invested in NCC, then wait for the 13.5 level to get crossed over for you to average further. But if you're looking to shift to some other stock completely, then I've given you the option already.
Has, especially for our viewer, been a big wealth eroder, because he bought it at 68, it's now at 31. Vivek, it's a long way for any sort of capital recovery, for Nandan, but what would you advocate? I mean, would you perhaps advocate that he stays on, because we have this entire infrastructure push as well, right, that we've been talking about. But then again, when you think of it, this infra push has been spoken about for the last many years, and still it's not done much for the share price. So what would be your, recommendation on an NCC?
Yeah, so, I was having a look at the stock in my app stockage, and I saw that, the problem with this stock is that it's an infrastructure company, and large part of its infrastructure project is with the government. And the condition of the government today, that government is not paying the states their GST dues. So for this kind of a company to realize money from the government over the coming period of, say, 2 to 3 years, that will be quite a daunting task. And, almost 60% of their order book is related to government projects, like building ports, building roads, etc. And only 35 to 40% is actually inside the building project. So I think fundamentally they are at a weak front right now. But the good point, the advantage of this company is that it's now they're decreasing the debt in the company. If you see the trend of last 5 to 6 years, the long-term debt has gone down, and the company is generating decent cash from operation. So fundamentally, it's a good company. Management is good. The promoter has maintained their stake. And in the management, in the shareholder list, I saw Mr. Rakesh Junjunwala is also there with a very high stake. Mr. Utpal Seth is there. He is part of the independent board there. So in terms of management quality, there is no doubt. But the only problem is that sector is quite laggard, and I don't think so this sector is in a hurry to recover. So it's a tough call for the gentleman, because he's already sitting at a significant loss in his investment. But I would say that this stock price above 27 is a fair enough stock to hold on. Will you average this stock? I have a doubt. I would better invest my money in other growing sectors rather than this laggard. Would you sell this stock and book your loss? I would say don't be in a hurry to do that. Maybe you can park this money, stay there till the stock price is above 27. And if you see the weakness still persists, then probably you can exit and invest in other growing sector.
So, well, you could say it's a good company, but it's a problematic sector really when it comes to NCC. So just hold on right now to what you have in NCC. Let's take on board our next question coming in from Bimal Kumar Shaw. He says, I'm holding 25 shares of Alembic Pharma at 1,036 rupees. He's okay to hold on to this, stock for another 2 to 3 years. He wants to know what must he do. Well, I'm not sure when he's bought the share, but one thing's for certain, he is not exactly sitting on, gains. And furthermore, what's interesting, Kunal, is that while we've seen this rip-roaring rally come by in many shares, Alembic Pharma, I guess, comparatively has moved a little more in a steady manner as opposed to this sharp surge that we've seen in a lot of the other mid-cap pharma names. Anything that you'd recommend? Because Bimal is sitting on a loss right now.
Loss, I think, and I think looking at the price, the purchase price in the chart, I would think that he's just bought it, I think, last month or somewhere closer to that. So I think in that regard, it's a very decent investment. Now, look at the price patterns for Alembic Pharma for the last 3 years, and I'm talking of 2016 to 2019, end somewhere. The stock was absolutely lying low. It was going through a downward drift. From 680 levels, the stock gradually moved towards 460, 450 levels in a span of 3 years, and that was a pattern of making a classical lower highs and lower tops. When the March sell-off came across, March 2020 sell-off came across, this stock also corrected back towards that 450 mark yet again. And post that, you saw one of the best recoveries for the mid-cap pharma basket or for the overall pharma basket. Of course, mid-cap pharma stocks, they've done exceptionally well. From 450, the stock had jumped up to 1100. So in terms of price performance, it's been an exceptional price performance for Alembic Pharma. Now, sometimes what is required is when stocks go through a downward drift, it requires a jolt and a jolt of even optimism to try and let these stocks come back to strong periods of uptrends. Now, the last 6-7 months of volumes for Alembic Pharma, particularly indicates that the stock is now restarting its uptrend, which I for one believe should last for at least a couple of years more, if not beyond that as well. In that regards, how the strategy should be: if you bought at say 1,020 odd levels, then wait for at least a 15 to 20% correction on the stock prices from your levels to try and buy these stocks further. Because these stocks have run up higher 3x, 4x in a span of 6-7 months, there is a possibility that the correction will also be very sharp and severe. But if you can take opportunity of those correction and try and average out at much better prices, try to bring your cost prices as lower as possible, then I believe that the chance of you gaining significant upside on the long term is pretty much high. So my view is very clear that you should buy the stocks on significant correction, at least a 15% correction from the recent highs or from your purchase price could be a good enough starting point for you to average further, provided your view has to be long term.
All right, that's the view coming in from Kunal for Alembic Pharma. Vivek, what's your view on Alembic Pharma? Like Kunal also saying that the charts indicate for a long-term uptrend coming in for Alembic Pharma, but do you hold a bullish view on the particular stock as well?
I think it's a very interesting company. If you see the overall fundamental parameters, that it's reasonably priced. It's not very expensive company vis-a-vis the other pharma companies, the whole industry PE. Plus, if you see the promoter stake, it has been pretty consistent, and they have not taken any pledge against the shares. So that these all gives confidence about the intent of the promoter, that yes, they believe in this business and they want to ride the business growth. And there has been consistent sales growth. EBITDA margin has also improved. So overall, this stock as a pharma company and the kind of products they operate in, they have a decent export exposure as well. So I think fundamentally this stock looks very impressive, and it did a multi-time frame breakout above 800. So I think the stock price above 800 is a fairly good price to be on. If he wants to average, he can probably do an average near that level. Because his buying price is only 1,050 odd, and right now it's almost 950. So doing an average 100 rupees below may not be a great idea. Maybe he can wait for another 50, 60 rupees, let it reach near that 800 level, and then probably go for an averaging. But this stock is a fundamentally good stock, not to worry. I think it's a stock which one can hold for a longer period of time.
Okay, so a fundamentally good stock, and Vivek gives Alembic Pharma a thumbs up. All right, well, it's time for our Chartbusters segment. So, Kunal, over to you. What exactly are the stocks, according to you, that are setting the charts on fire today?
So, Mubina, I'm particularly looking at the charts on Tata Motors, and I think it's interesting because it's just very recently that you saw the stock flying from 108, 105 breakout levels to almost the 150 plus. It's a good solid 40-45% return on Tata Motors. But then on the recent charts, if you look at the last 6 months of patterns, it's a classical uptrend in the making. And I'm stressing on the word classical over here because of this tendency of the stock to try and take supports at regular intervals at the strong support trend line and the resistance at those resistance lines, which you can see on the screen. So look at the support trend line. Now, it's been almost 4 or 5 consistent attempts previously where the stock tried to take support at this trend line. Every time it did, there was either some short-term rallies or a strong uptrend, which were in the making for the stock. And same is the case with resistances as well. Now the stock has come back again into a very strong support territory. So this support trend line, if it holds true for Tata Motors, which also apparently coincides with the previous low of Tata Motors, or the previous swing low of Tata Motors, if you can see at 118 or 119-ish level. So I believe that this is a very attractive zone where I think medium-term players or positional players, they could look at buying or accumulating Tata Motors at current level or at those levels of 118 to 120 odd zone. And I believe with the potential of with a time frame of 2 to 3 months, I would expect that the stock would come back to a 140, 145 zone pretty easily. So I think Tata Motors is the stock which I wanted to discuss particularly based on the consistency of this price uptrend, and given the fact that the stock is now tapping back into the strong support territories.
Okay, Kunal as well as Vivek, thanks so much for joining us today on ET Now, and helping our viewers out as well with their questions and queries. All right, moving on, let's take a look at now what are the big movers and shakers today in trade and what are we watching out for in our BNSN Cloud segment. So these are some of the stocks that are catching our attention. M&M for one, remember that this stock had taken it on the chin yesterday. The big fall that was witnessed in the market saw M&M cracking big time, but today a bout of recovery coming by in this auto major. It's 1.3% higher at 581 rupees. We have a RITES infrastructure as well that is in focus today. It has secured a major Turkey contract, so you are going to see some momentum over there. Maruti Suzuki too, this after, yesterday the company announced that they will be also essentially looking at a subscription model for some of their vehicles. But yeah, that too is in focus. Take a look at a BPCL, which as well is something that we are going to keep on our radar. Other stocks include a GAIL India. Remember that we are speaking about that big ONGC fire, which cut around 30 SCD gas supply. Granules India too is another mid-cap pharma stock that we are keeping our eyes out on. And furthermore, Advanced Enzymes yesterday, it was Nalanda India Equity Fund that bought around 42 lakh shares. Remember that this stock was among the top gainers in trade. And finally, a United Breweries, some not so good news coming in for beer sales. Market trends suggest that beer sales have been hit harder than hard liquor and wine.
All right, then those are the stocks that are in focus in our BNSN Cloud segment. And now it's time to unveil the winner of our quiz. And let me take you through the question. Let's recap through the question. And it is, which of the following chemical player has highest asset turnover ratio? And the options that were given was Rossari Biotech, PI Industries, Deepak Nitrate, and Aarti Industries. And the right answer to that is Rossari Biotech. And these are the champions for today. We have Nandi's Nandi, you have Screening Stocks, as well as Sandeep Bomishetty, who've given the right answer to the BNSN Quiz Connect. So Rosari Biotech is the correct answer, and the list of the champions are on your screen. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Welcome back. You're tuned in to Buy Now, Sell Now. Let's take a look at top market veteran voice. Earlier in the day, we spoke to Krishna Kumar of Eastspring Investments and tried to understand whether IT sector can actually sustain its current momentum in the long term. Listen in to his views.
What you got to think about is there are pockets which are getting completely smashed. Like we did for IT and pharma when it was completely bombed out about a year back. It's all come back pretty strong. I'm not very sure whether I want to buy earnings growth at this point in time, but I really want to be in pockets where there is a serious mismatch or a sharp divergence in terms of valuation compared to history. And so when I'm saying that, see, commodities and materials are pretty shunned words. And obviously the fiscal condition, the globe is not suggesting that there is going to be a massive capex stroke recovery from priming, if you may. But we kind of are looking at that space thinking that that's the space that is nobody wants to talk about. The analysts are ignored and the valuations are deep in the trough. Having said that, IT is one name where we think that there is a change in the world equations which will result in IT sustaining for a little while longer. Having said that, I will believe that the new IT paradigm will be different from the past IT paradigm. And hence, there will be changes in the equation. But I think Indian IT services is obviously a very promising piece. But in the equation, I think we are clearly avoiding expensive momentum, high growth forecasts for reasons that they are very, very prone, and the margin of safety is negligible given the uncertain world that we're living for.
Right. Well, that, of course, is IT in focus, especially after Accenture's, commentary on what they expect the IT sector to do from here on. Okay, stocks in news then. Let's understand all the buzzing stocks and details and what's causing them to be in news. Mahindra & Mahindra, the company has exercised a call option to acquire 633 shares of Sampo. Keeping it with auto, we have Citi that's maintained a buy on the auto major, keeping their target price at roughly about 8,350 odd rupees per share, as they say that, it's the top pick in the Indian auto pack, and that Asian MNCs have dominated Indian PVs, and Maruti is only slightly impacted by Kia till now, but they do not expect Maruti's hegemony in PVs being threatened. The dominance in small cars will continue. Right, meantime, has won a contract in Turkey of around 206 odd crore rupees for the construction of bridges. CLSA has maintained a sell on BPCL with a target at 360 rupees. They've noticed the massive capex cuts at global oil majors, and the quick closure of divestment, according to CLSA, will be difficult. So BPCL is down by about 2%. And of course, GAIL, as the ONGC plant fire has cut 30 MMSCMD gas supply. So there you have it. That's, of course, about all the stocks in news. But a reminder for all our viewers, it's Friday today. So on the Money Show, it will be our women's segment. The topic that we are going to be discussing is how businesses have coped, pivoted to survive and thrive during these times of COVID-19. We've got a nice panel of women who have really suffered the brunt of the lockdown but have emerged very strongly from it. Well, first up, Vinita Bali. She is, of course, ex-MD of Britannia. But, of course, remember that she sits on the board of directors of several companies. And that is something that does make her in a strong position to understand what exactly are big companies doing to cope with COVID. Gauri Devi Dayal of Food Matters. If there's one business that has been hit among many, it is definitely the restaurant business. Gauri Devi Dayal will share with us how she pivoted in her business. Viniti Saraf Mutreja, the powerhouse behind Viniti Organics as well, will be joining us. And finally, Shivarthi Bajaj of Box Engage, the company that started off as an events aggregator, but what a pivot into becoming the Indian alternative to the now banned TikTok. So you're out from these ladies on how they have navigated through these tough times. But for now, we're out of time, so we'll wrap it up on the money on Buy Now, Sell Now. Thanks for watching.